Hello and welcome everyone to this morning's Daily Market Report brought to you on behalf of CommunityFT for CommunityFT members, in which we're going to take a look at some major market movements that potentially occur over the next 24 hours. But before we do that, folks, at this point, if we can all embrace a quick risk warning. So if you can familiarize yourself with the information in front, engage as much as is possible, simply so that hereafter any decisions you make in your trading are of a fully informed nature. Okay, on the cards for us this morning, guys, let's take a look at some economies. The value of those economies as is directly reflected by the value of their currency. And let's also take a look then at some commodities. So let's move to the platform then to help us with that. Okay, guys, in front of us we're looking at the daily chart of US dollar versus Canadian dollar. Now, the first thing we notice, okay, is the huge bullish move over the last given period of time, back since around 2013. Now, that's a net bullish move, and of course there's been downtrends within that overall move, but what we could call that really then is a gradual weakening of the Canadian dollar and strengthening of the US dollar, if you're looking for some macroeconomic insights over the last given period of time. What's also very interesting about this market, though, and I'm going to switch to the monthly chart, is that recently, okay, we've broken above historical resistance back into, or historical, it is resistance, a ceiling in the market back around 2008. That's quite interesting, okay? And typically that can be indicative of a couple of things that are coming to light. So let's go back to the daily chart. Those of you who are following other asset classes will note that the price of crude oil is historically exceptionally low. And the Canadian dollar, or the Canadian economy, okay, which gives its value to the Canadian dollar, of course, is exceptionally dependent on the production and shipping of crude oil. So when the price of crude oil falls, the actual value that the economy can achieve as a result of being so tied up in that asset can fall also. And that could be a correlation we can observe in this case. In terms of looking for opportunities, though, from a technical perspective, guys, usually we'd be looking for the 100-day EMA, or to help us look for support and resistance in the market and opportunities therein, or the stochastic oscillator one might also use to help identify those areas where the market is overbought or oversold and look to catch those secondary trends, okay, within the overall net trend. Similarly, we can take a look at US corn, okay. Now I'm going to sketch in a couple of lines here, guys, okay. So just bear with me when I get these in. And there's some key levels I want to just make you aware of here, okay? So what we've done there is, guys, we've kind of shown, I guess, the gradual decreasing support, okay, or resistance it would be. And here we have the gradual increasing support. What's great about this is that this is one of those classical technical analysis principles which shows dynamic supply and demand in the market, which can often come to a head at the apex of this particular triangle here. Now, if we do come to the apex, okay, and the market breaches the low level, we could be looking for certain short positions. If it breaches the high level, we could be looking for long positions. We could use the 55-day EMA to help us capture that movement and confirm our assumptions, as well as the stochastic oscillator. So we hope that's been of help, everyone. If you have any further questions, do not hesitate to get in touch. We welcome all inquiries. Have a terrific day. We'll catch you tomorrow, and as we say here, keep learning.